The road to becoming a professional prop trader may be difficult, but it will be worthwhile in the end. The good news is that there are numerous prop trading firms for beginners that provide limitless opportunities. Unfortunately, not all of these prop businesses will be a good fit for you, which is why this video will help you understand what prop firms are, the risk of joining one, how you make money, and how they make money off you. I think we should start right at the beginning. What is a prop firm? Most individuals have heard of prop firms, but they have no idea what they are. A prop firm is a corporation that allows prop traders to use their skills to trade for them in return for a percentage of the profits generated. The firm gives traders capital to trade stocks, commodities, futures, derivatives, and currencies. And as a trader, you have the freedom to choose what you wish to trade. Now, prop firms aren't just willy-nilly companies that's gonna fund anyone and everyone. So they have this thing called an evaluation process. I apologize for disturbing your viewing pleasure. Just allow me 1 minute to thank today's sponsors. Join traders from all over South Africa with QuasiTrade's easy-to-use MetaTrader 5 platform. QuasiTrade is a proudly South African broker regulated by the FSCA and authorized as an ODP. You can verify their authorization using the FSP number 44816. They have 2 account types to choose from, and when you open an account, deposit your funds and trade, you can win your share of 10,000 Rand in account funding. Just make sure you sign up using the link in my description. Founded in 2013 by South Africans with a commitment to South Africa, QuasiTrade promises you a fair environment to trade in, safety in funds, and the best in client services. I sincerely hope you will consider this. For all your free educational needs, I suggest you take a look around Rolio Jack's YouTube channel. There you will learn how to fuse your technical analysis with fundamental analysis, as well as with data from the COT report, which is the Commitment of Traders report that tracks the moves of the banks, investment companies, and hedge funds. Let's get this channel to 10,000 subscribers and beyond, because such free lessons needs to be seen by as many people as possible. A video of Rolio per day keeps the scammers away. And Dinovia. Link in my description. I'll see you there. And in the context of prop firms, an evaluation process refers to the systematic appraisal of a trader's trading skills and performance to determine their ability to create profits. Before providing traders with access to capital, brokerage houses require this examination to confirm that they are capable of obtaining profitable results. The evaluation process typically consists of several phases, each with its own set of goals and constraints. In order to pass the examination, traders must accomplish these objectives. The staged strategy enables the company to analyze a trader's performance over time, as well as their capacity for effective risk management and market adaptation. A trader proves to the prop firm that they have the abilities, self-control, and consistency to make money without going through the review procedure. I think by now everyone is sitting with that question. Well, Rydell, how does it work? Prop trading firms do not employ demo accounts. Let's just get that straight. In contrast to other trading firms that enable traders to open a demo account, they do not. You are gonna start with a money account straight off after you have passed whatever evaluation process they have in store for you. Additionally, they employ prop traders to trade on their behalf by providing them with a set amount of funds based on their expertise. So you need to understand that you cannot come with a level 5 expertise and be funded with a level 20 expertise type of capital. You are most definitely going to crumble under the pressure. Depending on the terms of the agreement, the corporation will deduct some amount from the trader's profits. From firm to company, the agreement between the company and traders typically differs. Some businesses prefer to divide profits with traders 50-50. Other businesses can offer you a profit split of 25-30% depending on a variety of factors, including your talents. However, most prop trading companies charge a desk fee. Utilities, terminals, trading software, and employee wages are usually covered by this cost. Talking about cost, you are probably wondering, how does a prop firm make money? Well, there is 2 ways a prop firm makes money: through challenges and profit split. I am very certain we all know by now what a profit split is, as it was explained a few moments ago. So let me give you guys clarity on the challenges part. The challenge refers to the review procedure that traders must go through in order to become fully fledged prop traders. The charge traders pay to participate in this challenge will be proportional to the amount of funds they have access to if they are successful. For example, a $10,000 account challenge with one popular prop trading service costs roughly 155 euros, while its $200,000 account challenge costs traders 1,080 euros simply to get started. If the trader fails the challenge by violating one of the rules, they forfeit their starting payment. Some prop companies will provide a free retake, however, this is ultimately up to the judgment of the individual prop company. A trader can usually fail a task in these next ways. Number 1, maximum loss. The total loss of a trader is the most critical metric of all. This can range from 4% to 10% depending on the firm, albeit a more liberal loss limit will often cost more upfront. It should be noted that this usually entails losing 4 to 10% of the initial account value, the maximum daily loss. If a trader loses a certain percentage in a single day, they can fail the challenge even if they do not reach the maximum loss limit. Some prop firms may not employ this criteria, but those that do will often allow no more than 5% to be lost in a single day. This also applies to the initial account amount and not to any earnings made. The maximum time. Typically, traders will be given a specific number of days to accomplish the challenge. These time restrictions are typically rather loose, ranging from 30 to 180 days, but traders will be disqualified if the challenge is not completed within this time frame. And then lastly, profit target. Finally, traders must demonstrate that they can profit from their talents. Again, these targets vary from firm to firm, but they often range from 5 to 10%. Now, given that you can juggle all of these adversities that's stacked against you, I still wouldn't advise you to just jump into signing up with any prop firm or the prop firms that these trading influencers has been promoting recently. So, what do you have to look out for when choosing a prop firm? Number 1 is a trading platform. You have to make sure that the company that you are going to sign up for has adequate trading software if they are providing the trading platform, and if they are using a general platform, let's say like your MT4, your MT5, then it's up to you to make sure that everything checks out and that that trading platform is a good fit for you. Number 2, training and support. It's up to you to ensure that this company that you are going to sign up with has adequate training if they provide training, and adequate support, because I mean, it's one thing to sign up to a company expecting support, and it's one thing signing up to a company expecting support knowing very well there is reviews out there of the non-existent support. So please do your research. Number 3, and I think this is very important, is the evaluation process. You need to find out what are the hurdles that you need to jump over, and if you can even jump over them before choosing a certain prop firm. Number 4, profit share. You also need to be aware of how much these companies are going to take off your profit, because ultimately that is going to be the decider of how much you are going to make at the end of the day. You also need to look at capital provided, and to make sure you are well within the limitations that the prop firm has provided, I'd advise you to take a look at their trading autonomy and their rules, just to make sure that you don't get disqualified for a petty thing. Lastly, this is the most important thing to me. I'm gonna need you guys to take a look at the firm's reputation and their regulatory adherence. The reputation of a company in the financial markets is an important factor to consider. It provides information on the firm's dependability, success record, and the importance they have on their traders. Look for companies with a solid reputation in the industry. Along with reputation, the firm's regulatory compliance is critical. A trustworthy company should be a certified market maker and follow all trading requirements. This devotion assures that its dealers trade in a safe and secure environment, and that is ultimately all that we want. Investigating the firm's history, regulatory compliance, and success stories can provide an in-depth insight of what to expect from the firm. What you should understand is that prop firms are very similar to brokers. They eliminate banks in the trading process, which means you don't need to go to a bank to short the dollar, or you don't need to go to a bank to buy the Japanese yen. You can do this through your prop firm or your broker. Now, as per South African law, we understand that brokers should always be FSCA regulated, and when it comes to prop firms, I believe that they should also be either FSCA regulated or they should be a registered credit provider, because ultimately when you sign up for a prop firm, that is what you are buying. Credit to make larger trades than the amount that you have paid for to gain access to this capital to make larger trades. And that is very much similar to a banking model. I hope you guys can use this video as criteria to investigate these prop firms that you guys want to sign up. And if you have made it this far, please list prop firms in the bottom for me so that I can do follow-up videos so that we can research and investigate into these prop firms and see what prop firms we can sign up to and what prop firms we should stay away from. I'm really looking forward to those comments. Thanks for watching.